Aawaz.com.
This is the morning brief from the Economic Times, produced in collaboration with Aawaz.com.
5 unicorns in 4 straight days. What a headline. What a confidence booster for the entire startup ecosystem.
यूनिकॉर्न एक ऐसी चीज है जो हर एक स्टार्टअप के लिए सबसे एस्पिरेशनल होती है. हर एक स्टार्टअप जब शुरू करता है तो उनका एक अरमान होता है कि किसी दिन हम जाके यूनिकॉर्न बनेंगे.
India's newest unicorn. It is Infra.Market.
Back in 2013, when venture capitalist Aileen Lee first used the term unicorn to describe tech startups with a valuation of over $1 billion, she was using it in good faith because she wanted to convey rarity and alchemy, in her own words. But with the kind of action the Indian startup ecosystem has been seeing in 2021, we might need to rethink our use of that phrase. We're barely 4 months into the year, but 10 startups have already reached unicorn status, with 6 of them hitting that mark in one single week from April 5th. And coming at a time when a lot of us are wringing our hands over the downturn in the economy and job losses, it's the kind of thing that makes you pause, scratch your head and ask, what on earth's going on? That's what we're going to be decoding in today's episode. This is the morning brief from the Economic Times, and I'm Indulekha Aravind. To deconstruct this funding gold rush and the swelling unicorn club, I've asked 3 guests to weigh in with their thoughts. The first is Souvik Sengupta, co-founder of Infra.Market, a startup operating in the construction and infrastructure segment, which entered the unicorn club at the end of February. Now, the choice of my next guest might sound counterintuitive, but that's a term that I'm in fact borrowing from Nithin Kamath himself. He's, of course, the founder of online brokerage Zerodha, who, despite being a unicorn, hasn't accepted any VC funding, and he recently tweeted about his choices in a thread that went viral. My final guest is Archana Rai, ET's editor South, who's reported on and analyzed the Indian startup ecosystem right from its early days, or should I say, the times when a unicorn was in fact quite rare. Thank you, Souvik, Nithin, and Archana for joining us today. Souvik, let me start with you. You co-founded Infra.Market, a B2B marketplace for construction material which leverages technology, in 2016. In 2020, your startup was valued at $200 million. That's now jumped to over $1 billion with your latest round of funding earlier this year, and you have marquee investors like Tiger Global on board as well. What was different in your fundraise this time around?
So I think 2020 was obviously a very different year compared to any other fundraise, because obviously the situation of COVID was sort of very fluid. We didn't know how it was going to end up, and this fundraise happened in June when we were sort of unaware of how this is going to shape up. So I think there was a lot of uncertainty in the market at that time. So the fundraise took time. It took us almost 4 months to close it out. We started this process in Feb 2020, and by June, July we had the fundraise closed. But at that time, the market uncertainty was completely different. As the world still battles COVID and still is unsure where it's heading, I think in the investor circles, it's almost sort of they have discounted the entire situation where they feel that they've seen the worst. So when we went back to the market in Jan-Feb for a raising round, that uncertainty was missing. And obviously things moved much faster. When we discussed on our business, there were no questions being asked on how you will deal with this if there's a lockdown, how you will deal with this, if there is a certain amount of second wave, third wave. So all those questions were no longer being asked by the investors, something that we faced a lot in June. And also there was a certain amount of comfort from the investors since we've already dealt with one lockdown and we have, there was less disruption and the business was sort of sustainable despite the lockdown. They sort of felt that in such a situation, the company had this ability to deal with such black swan events, and I think that uncertainty had gone away, and the fundraise obviously happened in a much smoother way in 2021 than it happened in 2020, despite perhaps, COVID situation being even higher right now.
Archana, in the whole of 2020, there were about a dozen unicorns, and now, as I mentioned, in less than 4 months, we have 10 with possibly more waiting in the wings. Could you help me and our listeners understand what on earth's going on? What's driving the big funding rush and the valuations?
Thanks, Indu, for that question. And I think I would like to borrow from a line that Souvik just made about there being no uncertainty in the minds of the investors. That, I think, is an indicator really of what the situation is like. And from my perspective, I don't think we should look at this, the unprecedented increase in the number of unicorns, as a number issue. Break it down and look at the companies that are getting that money. That will answer that question for you, because in less than 4 months in 2021, we've had 10, while all last year we had 11, that's for sure. But look at the 10 that we have. There is fintech, there is Souvik's company that is in the B2B space, there is pharma, and there's a competitor to Nithin's Zerodha with Grow, and there is social with ShareChat. All of these are beneficiaries of two big trends that we are seeing overall. Digitization that has picked up speed because of the pandemic. The other, of course, is the push towards payments and for financial transactions moving online. So these are essentially a sign of the times that we are living in, the change that's happening. One, because of the pandemic itself. The other is the natural progression itself. India has seen this great push towards digitization over the last 5 years. All of that is maturing. So it's a question of everything coming together, where we are seeing this explosion in the number of companies and entrepreneurs who are willing to take those chances and take advantage of the opportunity. That said, it is of course entirely true that there is huge flows of global capital that's moving towards India. You know, a couple of days back, again, I saw a startup founder who, like Nithin, is bootstrapped, talking about this being entirely the fault of the Federal Reserve. Now, I don't know whether we should, sort of lay the blame at one door entirely. But of course, there's a huge pool of global capital that's looking for a resting place. I think of it as a positive development, Indu.
I'm sure a lot of people, especially in the startup ecosystem, would agree with you on that. Now, Nithin, you're a bit of an outlier in this whole funding frenzy, in that Zerodha, while of course being tremendously successful and having reached unicorn status, you've deliberately chosen not to take VC funding. And you had, of course, tweeted the other day about your choices. Can you tell us about how you're being wooed and how difficult it has been to say no?
Yeah, I mean, it is tough to say no to, when people are valuing you potentially at ridiculous kind of numbers.
I want to ask how ridiculous.
No, I mean, see, the thing is like Archana was just mentioning, right? I think there is excess capital around the world and it is kind of chasing growth. And I think across the world, India is one of the last few places where there is growth. So there is a lot of capital chasing India. And within the VCs and PEs, see, the thing is they're also businesses at the end of the day, right? Like, and for them, the product they have to offer, which is money, is very uniform, right? And the only way they can outbid each other is by throwing in, by increasing the valuations at which they're ready to kind of invest. If you actually go down the rung, it's not that everyone's able to raise money. It's just the top few businesses in each industry and sector is able to raise money, right? But the thing is, like I tweeted in those about it, right? And for us, firstly, we don't need the money, so we don't really see a point raising the money. I don't know why people find it very strange in today's world, because if we had a need of money, if we could use money to grow fast or grow larger, we would have raised money for sure. It's just that there isn't need, hence we don't. And in my previous avatar, I used to manage people's portfolios. And I hated the obligation that money brought on the table. So if there's a way to grow without that obligation, I prefer to take that route.
From what you've just said, it sounds like there's also a fear of missing out, or FOMO, that's playing out among investors.
Absolutely. I mean, as high as ever before. So, I mean, if there is some quality anywhere, they're just outbidding each other. I mean, there are angel rounds happening at $5 million, $10 million valuations. They're acting like how businesses act. Say multiple businesses have similar kind of product. They kind of give discounts or, do ridiculous things to attract customers. Very similar stuff is happening in the VCP circles as well, trying to attract, good companies.
It's a very sweet spot to be in if you're one of those lucky entrepreneurs. Souvik, Like Nithin here, you began as a bootstrapped firm, and yours is in fact one of the few profitable unicorns. You've seen profits for multiple years. So what pushed you to seek funding at this point, and was profitability a concern at all for the investors that you spoke with?
So yeah, we were bootstrapped for I think 3 years, 2016 to 2019. See, to be very honest, both me and my co-founder were unaware of this entire VC world when we started this company. We started a business like every business should be started. Like, we felt we have got to pay our salaries, we're going to take home something, and this business should pay for itself. And that's how we started this company. And that's how we ran it for 3 years. We didn't understand the concept of cash burn because we had no cash to burn, honestly. And whenever we raised money, we raised it from bank, because while we did not have a P&L burn, as in we were profitable, we did have a cash flow requirement. There's a working capital requirement that we had, which had to compensate for growth. Sadly, what happened in 2019 was, what we realized is that there were a lot of other startups in this sector who were getting funded with crazy money. And while we kept borrowing from India's banks, it's very difficult as a young entrepreneur, especially on a first generation entrepreneur, when you don't have assets. And if your business requires working capital, India's financial sector, I don't think is geared up yet to provide that sort of risk capital. At that stage, when we were bootstrapped, we borrowed up to 7 to 10 crores from Indian banks and ran this company. But we realized a lot of startups were getting crazy money, and not only were we competing with old traditional companies, we were competing with startups who could provide us product to our customers at a price point which was ridiculous, and we could not provide a certain amount of product because we didn't have the working capital to go ahead with it. And that's when we realized that, maybe we wanted to run this like a bootstrap company, build this out over the next decade. There was always the risk that if we don't raise capital, what if we don't survive? And that's when we sort of raised our first check from investors, because while being profitable, we needed working capital to grow this at a certain speed. And we did not want to suddenly become irrelevant when younger startups who may not be profitable and who didn't care about profitability could use the capital they had and basically throw it out of business. I admire companies like Zerodha, who have decided to not raise. They've built out a sustainable business. So profitability notwithstanding, I think startups should be valued on whether they have built up something sustainable, whether they can choose to not raise. Valuations can skyrocket, but what matters is that can you say no to an investor? And I think this entire funding spree that we are seeing right now is not only excess liquidity coming to the system, like Archana said and how Nithin said, there's a FOMO. But there's a FOMO among entrepreneurs also, to be honest, where they know that there's excess liquidity and they are not sure what is going to happen 6 months down the line. Okay, so no entrepreneur, whether their company is valued at $1 billion, $2 billion, or $10 billion, can put their hand on their heart and say, if I don't get capital for the next 3 years, I'll survive. None of the startups. See, everybody wants to raise capital as late as possible to get a better valuation, primarily to dilute less and less. But the reason they are raising today is because of the easy availability of capital. And they are not sure about the business, including us. I'm including us in this, where we are not sure that this business can survive without external capital. So I think it's a FOMO on both ends. And it's unfair to just say there's a FOMO from investors, there's a FOMO from startups also. That, what if the liquidity doesn't stay after 1 year? Take the money which is on the table. And that's the honest, truth, that we as startups have not yet built sustainable businesses that can actually say no to money.
So would you say that, of course, while there is a genuine capital requirement, but is this easy availability of this kind of capital also doing sort of disservice in a way? Souvik, I would like you and Nithin as well to comment.
The easy availability makes it a temptation to raise now than raise 1 year down the line. That's the only thing, right? And people who are waiting, like we waited a year to raise or a year and a half to raise till we got the right valuation, is only because we are profitable. So we could take that call that, we will wait, till we get the money at the right valuation. We could hold on for $1 billion valuation. Our last round was 200 million. If we were loss making and we were burning a lot of cash, we would have taken the money at even 500 million. So I think the question is, can you sustain yourself? And can you say no to money? If you can say no, then you can choose to not raise or raise at the absolute optimum valuations. But most Indian startups are not in that situation. The valuation is a function of liquidity coming in and not a function of startups saying no to money and saying, I'll not raise below a certain valuation, because none of the Indian startups, no matter what their valuation, if you don't give them capital for 3 years, they're not going to survive this business.
Fair enough. Nithin, is that your point of view as well, and what you're hearing, in the startup circles that you're in?
No, I mean, firstly, Souvik, that's brutally honest, and not too many people come out and say that very openly. So, thanks. No, I think what Souvik said is 100% true, right? See, the thing is that I'll firstly tell with Zerodha how we got lucky, right? So we started building the business for very active traders, F&O traders, intraday traders, and all of them, and these were revenue generating. Right. And our focus on growing the markets, attracting investors, etc., happened only after 4 or 5 years. So the first 4 or 5 years, we were kind of building a business which generates revenue. And then we went ahead and kind of extended into this, this user base who don't really generate any revenue, right? As in, because equity investing is free and all of that. And the first 4 or 5 years that we put in to attract this customer base is what helped us kind of be in this position where we are, where we can say no to capital. It also meant that we could offer a superior product, because if you want to attract the revenue generating customer, you have to keep improving on your product. So we had like that advantage over a competition who from day one started trying to build a business by attracting customers who don't generate revenue and by spending a lot of money on acquiring the customer, right? So it is not sustainable. Coming to your original question, is this disservice or what? I think, the big problem right now is in all these valuation numbers. I think what we are forgetting is that the value of money is depreciating faster than it ever did before. So it's just the fact that there's so much of dollars being printed. I don't think $1 2 years back is equal to $1 now, right? I mean, that's if you see Bitcoin or any asset class right now, if it's gone up, it's not because the assets become more valuable. In a lot of cases, it's also because the value of money has depreciated significantly. Right? It's just that we are still not seeing it in real life, as in it's only a matter of time. I think inflation will catch up, right? All of that it'll eventually come through as in at some point of time, right? So I think the disservice starts there. But is more money coming into India bad? No, not at all, right? As in it's good if Indian startups are able to raise money and it'll help our economy as such. Right. So it's a very tricky kind of a position to be in. I think, but as India, we are lucky that there's so many investors looking to come to India because they see, growth in this country.
Definitely.
So that way we are lucky. Yeah. But overall, it's a very tricky place to be in.
And you asked me one question on that. Sorry to cut you, but you asked me a question whether profitability was a concern. So we got turned down by 2-3 investors at a very early stage seed rounds because we were profitable. So they actually turned us down and said, you're profitable, so we can't invest as a VC. And these are not like unknown investors. I'm talking of some well-known Indian early stage investors who turned us down because we are profitable.
What was the rationale?
The rationale is in knowing that, we fund, basically we are here to fund a P&L burn. If you don't have a cash burn, what are you raising the money for? So there were a lot of questions asked there. And actually the entire focus on building a profitable business only started after the WeWork debacle. So when WeWork happened in 2019 late, that's when they all came back and said, you can't keep doing cash burn. You need to build businesses that can go public, that can go IPO. And that entire focus actually happened in late 2019. I'm talking of early 2019 when we first went to raise a round. We were turned down by multiple people because we were profitable and they were not looking at profitable businesses to fund.
That's something that I'm having a little difficulty wrapping my head around. Now, Archana, just to stress the valuation conversation that we're having, what's the general sentiment that you're feeling in terms of how sustainable are these valuations in the long run? And I'm also asking because, after 2015-16, which were also good years in terms of fundraising, we saw quite a few marquee startups go through markdowns. Do you think that's likely to happen again?
Yeah, before I answer that question directly, Indu, I just wanted to draw on a couple of things with regard to valuations that both Souvik and Nithin have highlighted. The first, I think, as India, we should just be happy that we have this quantum of money that's coming in, right? In itself, it's not a bad thing. But I think the concern happens, what use is that money being put to? For instance, you mentioned earlier rounds of mega financing that we've seen. In the first such round, soon after the 2008 meltdown, where again, I think it was, excess global capital that found its way again into India. A lot of the money went into companies that were burning cash for sure, yes, but that was money in the hands of the Indian consumer, right? and Indian investors weren't being affected. It was money that was coming into the market, and it was also creating wealth for a whole generation of employees, remember? Because these companies, when they are rewarded with high valuations, there are stock options that go to employees as well. That said, the second thing, of course, is that does it impede the build out of really valuable companies? And again, I'm going to step back here and look at it and go back again to the early part of the decade, where I feel a lot of observers of the startup ecosystem would have agreed that in the early days of the ride-hailing app build out, there was a really good company, Taxi for sure, that in a sense lost out in the valuation game. Rivals were able to raise money at higher valuations and get greater pools of capital that essentially pushed this company out of the game, and in a way they were forced to sell out. So from a consumer perspective, did the consumer lose out on a good company because of the valuation game? In that instance, I think yes. So to my mind, there are different ways of looking at this, right? So there is no clear black and white is what I'm trying to say with this entire valuation thing. There is gain, there is pain. Will we see markdowns as we saw in 2015 and 16? I think, again, I'm going to go back to answer that question as to remember which were the markdowns. It was Flipkart, right? Famously getting those markdowns in that phase. I think Morgan Stanley went in and so on. That just tells you that they were, sort of all of those factors that Souvik and Nithin just mentioned right now, they know better, was the reason that money kept getting pumped into it. It was the winner-take-all model, and all the money was flowing in that direction. The market was not yet ready, as a result of which the metrics didn't match up. And then I suppose the natural outcome was the markdown. In this phase, are we likely to see that? I would like to think no, because one, the markets that this set of companies are chasing are looking at consumers and a more prepared, internet penetration has gone up hugely since 2015 to 2020. India is in a very different space. There are definite digitization has taken on a momentum of its own. So the market is there, and you have founders like Nithin and Souvik who are saying, we would want to build profitable businesses. So that understanding following the WeWork debacle has also sunk in.
And that'd be great if, of course, there's some lessons learned which will help the whole ecosystem be more sustainable. Nithin, as a seasoned entrepreneur, what would you advise others who are evaluating fundraising options right now? And, what might be pitfalls of raising very large rounds that they might not necessarily need, possibly?
The thing is, if like how Souvik just mentioned, right, as in if you don't really have at least a 3-year runway, I think you should go raise it. I don't think you'll find a better opportunity than now, because if you haven't already built a sustainable business and there is, you don't really have that runway, I think it's a no-brainer. For people who are starting up, who have an option, I think you should think of building a business which is more sustainable. And one of the ways to make it more sustainable is to figure a way quickly, how do you generate revenue from your users, and how do you stay ahead of your competition in terms of the product. Now, the problem is if the product is very similar, then it's very tough to, kind of generate revenue from the users, because the other guy, if he ends up raising money, he will probably throw goodies, and then you'll be forced to down your revenue as well. So it's a tricky kind of a situation, but and this is probably a disservice. Is all this money flowing in? What it is doing is it's forcing people to kind of build unsustainable businesses, right? Because you're always in fear of your competition being able to raise money, and you're already trying to kind of not generate enough from your customer base, right? But coming to the question, I think right now is as good as a time if you wanted to raise money to go out and raise money.
So strike while the iron is hot.
Unfortunately, sounds sad, but yeah, but it is.
Souvik, coming back to you, this might sound like a slightly esoteric question, but what does the whole unicorn tag mean for you as a co-founder? Especially with the number of unicorns that are being created, does that put additional pressure on founders, perhaps distract from things like bottom line, or do you just think of it as a vanity metric?
I think it's just a vanity metric in the sense that it's just used as a comparison. So if you want to compare two startups, in different sectors, and in different countries, different geographies. And then, yes, you can use that as a metric, okay, which has reached unicorn status and which hasn't. I think that is all.
Okay.
To be honest, I think the pressure that you are talking about, or as a founder, it comes in when you raise the first check from external investors. So when you raise someone's money, the pressure has already started. Whether you're a unicorn or not a unicorn, when you are sitting on someone else's money, you have a pressure to sort of, you have to give them a return. You have to, you have to ensure that you manage it well. You have to, have certain prudence. So I think that pressure is already there. Unicorns today, I think it's just a metric, where, some family and friends will congratulate you because they hear about you. But other than that, I don't think as a founder or as a team, it affects in any way beyond that one day when it gets announced. If you want to measure startups, measure them and how many months they are away from building a sustainable business.
That's definitely something for all of us to think of, from entrepreneurs to VCs to, I guess, folks like us who are covering the startup stories. My final question, and I'd like each of you to share your response. Should we consider retiring the term unicorn since they are definitely not mythical and no longer rare? Archana, would you like to go first?
I'd say no, not until we have another Harry Potter.
Fair enough. Nithin, what do you think?
I mean, it isn't mythical anymore, but it is kind of, something which drives people towards, like that. It's a kind of a notional target for a lot of people building their businesses. So maybe continue, to have it.
Souvik?
I have no problem with this term unicorn, or I have no problem with decacorns being built out. I just hope that we sort of are creating in the same time, like we are creating an ecosystem for mega rounds. We create an ecosystem for founders who are not, who are not able to raise capital, who are trying to build sustainable businesses, or who are struggling to raise capital. We sort of have something for them, where inherently we build out an ecosystem which supports young businesses or new businesses. And I hope we can do that as a country. If we can do that as a country, it doesn't matter how many unicorns we build out, because then we'll always have these smaller businesses also operating. I think today we sort of have a situation where a lot of money coming into startups and funded companies, and the ones who are not funded are actually struggling on a day-to-day basis. I think that sort of differentiation is getting played out a lot more. I think we should have to do away with that. And we can continue calling people unicorns and continue celebrating weekly 10 unicorns. But a young guy who wants to start up, doesn't want to raise capital, he should also have an ecosystem that supports him. I think that's missing today.
That's a great point you've made, Souvik, and I hope that we can have a longer conversation about that, possibly on the morning brief itself. But for now, thank you so much for joining us, Souvik, Nithin and Archana. It was a discussion that I enjoyed greatly. As you just heard, unicorns are evidently not going anywhere, neither the term nor the companies. We'll have to see how the ongoing funding gold rush plays out in the days to come. But for now, startups here are in the sweet spot of being wooed by global capital, eager to invest in the India story. And before 2021 ends, we're likely to see the Indian unicorn list get even longer. I'm Indulekha Arvind, and you've been listening to the Morning Brief from the Economic Times. Today's episode was edited by Anjali Venugopalan and coordinated by Nehal Chaliawala. Do send in your feedback to the Morning Brief at timesgroup.com and share the episode on social media if you enjoyed it. The Morning Brief airs every Tuesday, Thursday, and Friday. Thank you for listening and have a great day.
Awaaz.com